Hello, good morning everyone. I am Elton John Bimbudo and my report is about performance measurements in decentralized organization. In this report, I am with Ma'am Junita Ong. So in this particular chapter or topic, I'm going to discuss the reasons of decentralization, advantages and disadvantages, as well as the different responsibility centers. We have cost center, profit center, and investment center. I will also discuss to you the performance measurements such as segmented net income and profit margin ratio. And Ma'am Chunita Ong will discuss to you the return of investment, residual income, and economic value added. So this decentralized organizations. We will define the term decentralized organization and explain the reasons, advantages, and disadvantages of decentralization. Question is, why does decentralization of organization what does decentralization of organization mean? So why do organizations decentralize their operations? Decentralized organization is a type of organizational structure. Decentralized organizations delegate decision making and operational responsibilities to managers of each segment or of the organization. So segments are often called divisions or subunits. Decentralization is not limited to a particular type of organization, and most organizations that have grown in size and complexity decentralize to some extent. So when we say decentralized organization, this organization is divided into subunits or segments. And these subdivisions or segments have their own managers. And these managers are responsible for decision making in some levels. So what is really the reason why organizations decentralize their operations? Here, expansion of business organization is the top reason of decentralization. Organization often decentralize out of necessity as they expand. The responsibility of one manager or group of managers to run the entire organization can become overwhelming as the number of products offered increases. So one top reason why organizations decentralize operations because of the expansion of the organization. When the organization or the business organization is very huge, then it would be hard for the top management to manage every operations. So they would decide to divide the organization into subunits, and those subunits would have different local managers, and those local managers uh, will be responsible for making decisions as to some level. So here we have the difference between decentralized and centralized organization. For the centralized organization, I have mentioned a while ago that the organization is divided into subunits. For example, for grain products organization, there are three divisions. We have sporting goods division, board games division, and computer games division. Since this game products is quite huge in size, then it is divided into different divisions. And of course, each division has its own manager, and these managers are responsible for making decisions. And later, I will discuss to you what will be the level of responsibility of the different local managers. For centralized organization, we only have one management, the top management, and it is responsible for the rest of the operations within the business organization. But before that, I will first discuss the advantages of decentralizing operations. So first, the first one is increased expertise. So rather than having one manager, a group of managers trying to make decisions for a wide range of products, decentralized organizations delegate decision-making authority to local managers who have expertise in specific products. So there's an increased expertise because the top management would put a specific local manager who is very expert in a specific division. And also there will be quicker decisions. By having increased in expertise and decision-making authority, local managers are able to make decisions quickly. So since local managers are more expert in their area or in their assigned division, then there could be quicker decisions. And of course, refocus of top management responsibilities. The top management responsibilities will be they would cater those company-wide issues. Since for those specific issues, there are local managers who will be assigned to those. And then the top management will be refocused to addressing the company-wide issues or responsibilities. And of course, motivation of local managers. These local managers or these managers of the different divisions or subunits will be evaluated based on their performance or based on the performance of their assigned division. And with that, they will be more motivated to do better or to do best in their assigned division since they will be evaluated based on the performance of their assigned division. And also we have disadvantages of decentralizing operations. We have duplication of services. So say for example, organizations that decentralize often duplicate administrative services such as accounting and computer support. So each division may have its own accounting or computer support, even though these divisions are part of a certain organization, then there is a duplication of services since each division can have their own accounting or computer support. So it's a duplication of services. And we also have conflict of interest between or among local managers, since somehow there would be a competition since each manager will be evaluated, will be their performance will be measured based on the output or performance of their assigned division. So somehow there could be conflict of interest among the local managers, and also there would be loss of control from the top management. Say for example, if there are so many subunits or divisions within the organization, the top management would somehow uh, lose control of those different subunits or divisions. Decentralization will lead to a loss of control at top management levels, which can have negative consequences for the organization's reputation if local managers struggle to maintain the level of quality of their customers' expectation. Now, I have mentioned a while ago that these local managers are responsible for making decisions as to some extent, and these are their responsibility. So, uh, these are responsibility centers. Okay, so what are responsibility centers? So, organization establish responsibility centers because the purpose of establishing these centers within the organization is to hold managers responsible for only the assets, revenues, and costs that they can control. Say, for example, a factory manager typically has control over production costs but not sales. This manager's responsibility center would only include production cost. A retail store manager typically has control over sales prices and cost. This manager's responsibility center would only include revenues and cost. The level of control a manager has over a segment's assets, revenues, and cost will help determine the type of responsibility center used for each manager. So that's the determination of responsibility centers or the type of responsibility centers depending on the scope of the students, the scope of the manager's decision making. Okay, so these are the three types of responsibility centers. We have the cost center, profit center, and investment center. So what is a cost center? A cost center is an organizational segment that is responsible for cost, but not revenue or investment in assets. Service departments such as accounting, marketing, computer support, and human resources are cost centers. Managers of these departments are evaluated based on providing a certain level of services for the company at a reasonable cost. Next is the profit center. It is an it is an organizational segment that is responsible for cost and revenues and therefore profit, but not investment in assets. Retail stores for companies and individual fast food restaurants are examples of profit centers. Profit center determination must be made on a case-to-case basis, and it depends on the level of responsibility assigned to the store manager. Another one, we also have investment center. If cost center only for is responsible only for cost, and profit is responsible for revenues and costs, then the investment center is responsible for the three: cost, revenues, and investments in assets. Investment center managers have control over asset investment decision. In many cases, investment centers are treated as standalone business because they are responsible for cost, revenues, and investment in assets. Okay, so let's proceed to one of the performance measurements in decentralized organizations. I have mentioned a while ago that there are segmented net income, profit margin ratio, return of investment, residual income, and economic value added. So for I will discuss first the segmented net income for investment centers. So we will calculate and interpret segmented net income to evaluate performance of investment centers. So what is segmented net income, by the way? The starting point for evaluating investment center is typically with reviewing segmented income for each investment center or division. Segment income is segment revenues minus segment expenses. Top management is interested in the level of profit that each division generates, and segmented income gives them this information. Say for example, uh, actually there are different measurements of the performance of local managers or the performance of different divisions in a decentralized organization. So one is the segmented net income. Okay, so here, for the Game Products Incorporated, this is an example of segmented net income. We have here for there are since a Game Products Incorporated is a decentralized organization, there are divisions: sporting goods division, board games, and computer games. So in the computation of segmented net income, we have here the sales, cost of goods sold, and the rest of the items, and I will highlight the net income. We have for the sporting goods division there's a net income of 2,306,000. Well, in board games, you have 3,466,000, and in the computer games division, we have 1,577,000. So if I am the top manager, and I will base the performance of the local managers on their net income, I would say that the board games division has performed best since it has the highest net income, 3,466,000. But would it be enough? Would it be fair to other divisions? Of course, somehow it wouldn't be a fair. It wouldn't be fair because the net income would also be depend on the sales of the board, the sales obtained by the different divisions. So, for example, for the sporting goods division, there's 20 million sales. And then the board games, 34 million in sales, and computer games, 29 million in sales. Of course, the board games division has the highest sale compared to the other two division. So of course, we would expect that the board games division would also generate the highest net income because it has the highest sale. Okay, so there are weaknesses of this net income as basis of performance evaluation of the different divisions in a decentralized organization. One is not all divisions are equal of size. No, larger divisions should produce larger profits. So to address this weakness, we would instead look into the profit margin ratio instead of looking merely on the net income. Profit margin ratio will be can be computed when you divide net income by the sales. Okay, so it's a percentage of net income against sales. So here, let's go back to the table. The profit margin ratio for the sporting goods division is 11.53%, while in board games 10.19% and computer games division 5.44%. Of course, based on the profit margin ratio of sales, net income against sales, we have 11.53 for sporting goods division, which is the highest one. No, the profit margin ratio is the percentage of net income against sales. Okay, so of course, if we base the performance, the level of performance of this division on profit margin ratio, we could say that the sporting goods division has performed best because it has the highest profit margin ratio, which is 11.53%. Okay? Now, there's another weakness of the segmented net income. First is we have here the second one, net income as the sole measure of performance ignores the assets used to produce net income. Okay, for example, we have here for the sporting goods division only invested approximately 29 million in assets to produce 2 million 306,000 income. While the board games division invested 55 million in assets to produce 3,466,000 income. Okay, here. So the computation of the segmented net income does not include, or it ignores the investment in assets. So for us to further determine, no, the performance of the different divisions in a decentralized organization, we can make use of the return of investment, the residual income, and the economic value added. No? And these are other measures of the performance of the different division in a decentralized organization. And these three will be discussed by my co-reporter, Ma'am Chinita Ong. So thank you for listening.